Okay, I have asked my daughter Caitlin to join me for a little interview about um, what a high school senior thinks about the future.
Oh,
So, so Caitlin, you're a senior at Fairhope High School,
yes.
and you're going to college this fall.
Yes.
What college are you going to?
The University of South Alabama.
And what are you thinking you might study? I know it might change, but what are you thinking?
Business.
All right. So a business degree should take 4 years, right?
Yep.
All right. So in 4 years, you're going to graduate, and that'll be in um, 2029, and then you're going to start working.
Yep.
So at this point in your life, what do you think the future looks like when you start working?
Well, maybe I'll get in a business, and then I'm entry level, and then you gotta climb your way up the ladder, and then once you get enough what's it called?
Experience?
Experience. Yes, that's the word. Then maybe one day I'll own my own business.
That's awesome. All right. So I do mortgages.
Yes.
I'm curious what your thoughts are about home ownership in the future, and if that's something that's available to you, or when you think you'd be able to buy your own home.
My goal to buy my own home I would probably say 25.
25 years old?
Yep.
I think that's pretty good.
25 years old.
Yeah.
Hopefully.
I think that's pretty good. So you're going to graduate, you'll be about 21 or 22 when you graduate, get a couple years work experience, and be able to buy a house shortly thereafter.
Yes.
Okay. And do you think that's going to be your forever home, or you're going to buy a starter home and then move up eventually?
Buy a starter home and move up eventually.
Okay, great. Do you have any idea what it would take to buy a home?
Somewhat.
Do you know what type of down payment you'd need or how much savings you'd need?
I mean, somewhat, but no.
Okay.
Not really.
All right. So just so you know, typically you need 3.5% down for an FHA loan. That's what a lot of people use for the first one.
I thought it was 20%.
Yep, you don't need 20% down. That's much more to save up, and you don't need that. So a lot of first-time home buyers fresh out of college, they save up for a couple years, just like you're thinking, 3.5% down. So if it was a $200,000 house, and I should have asked you first what you thought a house cost for a starter home, but what do you think a starter home would cost?
Probably 20K.
20, yep.
20K.
There's some opportunities for wait, 20K or 200K?
Probably 200K.
Okay, all right,
Not
good.
20K.
20 is going to be a real starter home. Probably one you won't want to live in. All right, so $200,000. The down payment would only be $7,000.
Oh, that's not that bad.
That's not that bad. And there are closing costs, but usually we can get the seller to pay most of those, if not all. So you're kind of well on your way to being able to do that. One of the things that you need is work history. How long do you think you need to be working before you qualify to buy a house?
I want to say the answer is at least 3 years.
Yeah, it's 2. Very close. 2 years. But here's the cool thing. Did you know if you go to school for business and then you get a job in business, you can buy a house with just the offer letter from your new job?
Oh.
Because the schooling actually counts as your 2 years of work history. You've already shown you can do something for 2 years, then you went out and got a job in that area. We can use your schooling as your work history. You could actually buy a house day one if you had some savings.
Oh, that's pretty cool.
That's pretty cool.
That's pretty cool.
There are other options too. So there are options where it's no money down to buy a home. So things like a USDA mortgage or down payment assistance, or you could get a gift from a family member if they had some extra money to help you with the down payment, and that counts towards your down payment. So you already have a car.
Yes.
That you got for your 16th birthday. So you don't have a car payment.
No.
What do you know about credit?
The better the credit, the better your insurance rate is, the better, like, I think it's like the better your credit is, the better interest rate you get, which means you like owe less money overall, and the bank will actually give you more money if you have a better credit, because then you'll know you'll pay it back.
Excellent.
Oh, duh.
That's exactly right. I have to pause while I let the dog in. Credit. And the better your credit score, the better your interest rate, and the higher the chances of you being able to be approved for the home.
Yes.
What do you know about getting a higher credit score?
Well, I don't know if this counts, but if you have a credit card and you just you have a credit card and a debit card, and you have money on your debit card, but then you just spend all your money on your credit card, it's like spending money you don't have, so then you're gonna owe it back. So that lowers your credit score.
Yeah.
So that's bad news.
That's bad news. Having a credit card is good, right? Because if they look at how your credit history has been.
Yes.
All right. So if you have a credit card and you use it sparingly, but let's say you have $1,000 limit on the credit card and you never spend more than $200 or $300 and you always pay it back, you pay your bill every time on time.
That's good. That ups your credit score.
That ups your credit score. Exactly. And if you max that credit card out and you spend all $1,000, that's going to drop your score.
Yes.
And if you miss payments, it really drops it. The other thing is if you have a couple, say 2 or 3 different, what they call credit trade lines, so those could be different credit cards or a car loan or something like that with good payment history, that's also going to increase your credit score. So one thing now that you're 18 that we should do is we should get you a credit card. But I only say that because I know you're good with money and I know you're good at saving and that you would only use it when you really needed to and you would pay it back all the time. So that is something we should do in the near future. And there's a couple ways for somebody your age to start building credit. The first is you can get what's known as a secured credit card, which how that works is you sign up for the credit card and you literally mail them $300 and then they're going to give you a credit card with $300 available balance. So they already have the $300, but now you can use that credit card and pay it on time, and it helps you build your credit history when you have no credit history. The other thing we can do is we could add you as an authorized user on one of our cards that has a long payment history and no negative marks on it. So we could look at a credit card that has a good balance and good payment history, add you, and that would automatically add that to your credit profile.
That's cool.
Yeah. So now that you're 18, those are some things we need to start thinking about doing. That way, when you graduate college, as long as you've been smart with those credit cards, you'd be ready to buy a home.
Cool.
All right?
Yes.
Let me ask you one more question.
Got it.
If you were to guess, what do you think your starting salary would be when you graduate college? Have you done any research into it?
No.
All right. Perfect. I'm glad to hear that. What do you think your starting salary would be?
Yearly?
Yearly, monthly, weekly, whatever.
I don't know. Maybe $35K.
$35K a year?
A year.
For a college graduate,
maybe.
In business, I'm hoping it's a little higher.
Me too.
It could be 35, but I wouldn't be surprised if you started at $50,000 a year. Okay?
That's a lot of money.
It's a lot of money. Yeah, it's a lot of money. So let's assume it's 50 for a moment, okay? As a matter of fact, to make math easy, we're going to assume it's 60 because that means you make $5,000 every month.
Okay.
All right. So if you're making $5,000 a month before taxes, before paying for health insurance, before paying for any of your other bills, right? $5,000 a month is what you earn. You have to save for retirement too. So there's some savings in there. Let's say you're bringing home 4,000 out of the 5. But in the mortgage world, we look at the bigger number. We look at the 5,000. How much do you think your mortgage payment could be maximum if you make $5,000 a month?
I have zero idea.
Okay.
Like actually zero idea.
Yeah. You want it to be about a third or less. Now we can get a little higher than that. We could get it up into the 40, closer to 50% range. I think it maxes out at 47%. But it would be difficult to make that payment on your own if it was that high. So let's say it's about a third. So something like $1,700 a month would be your mortgage payment, and then you've got a budget in, if you're getting a new car, a car loan, any student loans, any other debts that you have, like your credit cards, to make sure you still have enough money to live on at the end of the month. Does that make sense?
Yes.
Okay. And then if you're buying a house with somebody, obviously you can combine those two incomes. So let's say it's in the future and you got married, you and your spouse would add your two incomes together, and then we'd look at the total debt to income ratio. So if your total income was $100,000, all of a sudden you can afford twice the house.
Yes.
Out of curiosity, where do you think you'd want to live?
Probably somewhere around here.
Yeah.
Or Florida.
Yeah.
Orlando,
yeah. Do they sell houses in Disney World?
No.
Like right in Magic Kingdom?
But they should.
They should.
Disney,
Absolutely.
if you are listening, I would buy a house there.
100%. All right. I think those are all good areas to live in because we love being by the beach and with the sunshine. All right.
Sun.
Well, I appreciate it. I was curious what kids who are going to college are thinking about for the future. Do you think your friends kind of think the same thing, that they think they can buy a house when they're 25, or do they think that's not even open to them?
I think that I know, especially the kids in my math class and at our high school, we have a class that seniors take, and it's all about mortgages, houses, car payments, insurance rate, really like real world scenario things, which is how I knew a lot of what you were talking about.
That's awesome.
And having you as a mortgage person.
I did not have that class growing up, and I really wish I had, because I might have made some smarter decisions while I was in college and when I got out of college about using credit wisely instead of spending. So you're doing all the right things, and I'm proud of you for that. And I can't wait to see where you go with college next year and what happens after that.
Where I go.
Thank you, Caitlin, for joining me.
Of course.
All right.
Bye.
Bye.